Hi there, welcome to GrainTV. I'm Kevin McNew. It's Thursday, January 7th, a very range-bound day of trading in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn and beans closed quarter-cent down, while wheat managed to have some sort of stimulus from a short covering rally, gaining 5 3/4 cents. But overall, we continue really to just mark time until we get the Tuesday's USDA supply and demand data. On the other news out today, we had weekly export sales that were pretty disappointing, especially for wheat and corn. Let's take a look at that data. First of all, wheat coming in at a paltry 77,000 metric tons. That was for old crop. There were no new crop sales for 16-17, well below analyst expectations that range from 200 to 400,000. And corn coming in again well below expectations at only 253,000 metric tons versus 400 to 600,000 expected. So again, this is a holiday week that was being reported on this week, so it's not terribly surprising, but it is a reflection of just how poorly our export situation is. We have strong dollar that is causing our exports to be pricey. In addition, we have some of our major competitors like Argentina who are seeing their currencies devalue sharply. And so we are just facing a very, very rocky road when it comes to exports this year. And let's take a look at the scorecard to see how we're faring. And unfortunately, in all three grains, we are faring far worse than what USDA is factoring in to their current supply and demand estimates. In the case of corn, we are trailing last year's pace by 25%. That's right, 1/4 down from last year. You compare that to what USDA expects, and they are only looking for a 6% drop. Put that in bushels perspective, that's a shortfall of about 300 million bushels. So if we do not pick it up and we continue to see a 25% shortfall from last year, that means our ending stocks or our carryout for old crop will rise by about 300 million bushels from where we are now at 1.7 billion. So that is a very, very scary number in my opinion. On beans, we're doing a little better. We're only 11% down versus USDA factoring in a 7% drop, but wheat as well having quite a bit of a shortfall, coming in at 15% below last year, while USDA only looks for a 6% drop. So when we look at supply and demand data on Tuesday, in my opinion, USDA is going to have to start ratcheting back, especially in the case of corn and even so in wheat, their export expectations, because we are just not meeting what I would think is a realistic pace at this time of year. Speaking of Tuesday's report, let's take a look today first at the South American production estimates that analysts are looking for. And here, we don't see much of a change. The one number that does sort of jump out at me is Brazil. Analysts look for something just a little bit south of 100 million metric tons, coming in at 99.3. They don't see any change in Argentina's corn crop, a slight bump up in Argentina's bean crop, and a slight drop in Brazil's corn crop. So, we'll see what USDA throws on Tuesday for the South American data. We'll also be talking tomorrow about expectations for the U.S. numbers, specifically corn and soybean production forecasts and ending stocks, as well as the expectations for wheat seedings, which will also come out on Tuesday. That's all we got today. Have a great night and trade safely.